operating PATMI has strengthened, and that's largely due to the increase in terms of the fund management fees, and also the improvement in the lodging business. But I think with the recovery that we are seeing in the lodging business, with the greater signings and the recent acquisition of Oakwood done by Kevin's team, I think it's starting to demonstrate that it delivers strong fee income, and will continue to do so as the lodging sector continues to improve, and will fit nicely to the bottom line. The Chinese government taking a more enlightened approach towards the management of COVID and around all the restrictions, we believe that the sector will continue to improve. Apart from capital recycling, we will continue to focus in terms of the execution of the fund strategies. Happy to highlight that we have strengthened the teams at the country levels to look at off-market type deals. And Simon has also built up capital raising teams. Over the next few months, 1 to 2 months, we should be able to share more fund products, and also in terms of the acquisition. Interest rates have gone up, cost of capital have gone up for many companies, and that's why we have to be a lot more careful in the way we look for deals. We have seen corrections in the public markets, and we have not seen the same level of correction in the private market side. So we are definitely on the lookout for deals, but we will be very careful in the way we pursue growth. There are definitely strong pent-up demand from the local domestic capital to look for quality assets, good portfolio, in terms of being able to deploy the capital, that's put the capital with managers that they feel comfortable in portfolio that is generally well managed. So I think that's an important point that I want to stress. So China will continue to be an important part, and you will see us leveraging a lot more on domestic capital to help fund the growth of the China business. I think at the end of the day, being asset managers for, at least for the REITs portfolio, we want to make sure that the various REITs will continue to own assets, good locations. Those assets are in positions where we can asset manage, continue to drive rental growth, and there's still value to be done. But if there are some assets that we feel that in terms of the positions, it may no longer be so core, and we are unable to add further value, we definitely look for opportunities to divest them. Having the balance sheet gives us the flexibility to be prepared to support the vehicles, whether it is the REITs or the private funds, to take strategic positions. And if we are going to use our balance sheet, we do want to make sure that it must be able to drive long-term shareholder value for the CLI investors.